Hey, it's Mark Ferguson with Investor More, and we're back talking about the real estate market and Realtor.com's monthly housing report, which gives us lots of great information, and it's got some interesting things in it this month that I was not expecting. So we'll show you what that means. Does it mean the housing crash is coming? Does it not? We'll also look at new builds, some other interesting information, and I try not to get too political, but I do talk about facts and different things going on in the political world and especially government world. But Kamala Harris said a few things and has been advertising a few things that are very interesting when you look at new construction. So we'll talk about that as well. All right, so here, as we get into it, is the September 2024 monthly housing market trends report. So for those of you who don't know, I've been a realtor for 20 plus years now, a real estate investor for almost that long too. I still buy lots of commercial properties, multifamily properties, houses, and I still sell houses once in a while, mostly to friends and family. I also own a real estate brokerage. So I have been immersed in real estate for a very long time. And it's always interesting to me to see the trends and charts and what's happening. And I like Realtor.com's numbers because we'll show you this right here, although we'll try and zoom so you can see it better. There we go. They show us like the last few years of data, which is really nice because so many people will post graphs and charts and videos and say, oh, listings are down 20% from last year, or prices are down 10%, and they'll be like month over month prices. And it's very hard to know what's happening without looking at the context of multiple years during that exact same period of time, because real estate is very cyclical and it has a lot of ups and downs throughout the year that are very similar every year, and it's very easy to manipulate that data and show something that's not really happening. So that's why I like these charts. So mortgage rates, we'll talk about those a little bit too. That's tricky. That might be causing some of these issues we're going to show you. So here's the active listing count in the whole country. And these indicate the years 17, 18, 19, 20, 21, 22, 23, 24. So brown right here is 24. And you can see the active listing count has been steadily increasing all year. And that's not that odd. But you can see kind of in a normal market, I like to call pre-COVID a normal market. After COVID, it's just been crazy and weird. But in pre-COVID, you saw an increase until August or so. I guess in that one, it kept increasing a little longer. And then you start to see a decrease. So we'll see if we see this decrease this year, but we're starting to see a little more listings than we have in the past. Definitely more than the last few years, but again, those were crazy years. It's hard to compare this year to last year's a little easier, but 2020, 2021, just because it's such a strange real estate market and not even close to normal. But it's still, as you can see, we don't have even close to the amount of listings that we had in those previous 3 years in what was a normal market, and still had prices rising during that time. So when people freak out and say there's more listings, there's more price drops, a crash is coming, remember, we are still have way fewer listings, a much more competitive market than we did before COVID. And that's with interest rates 2 or 3 times higher than before COVID, and prices were still going up pre-COVID. So there is so far to go for us to see any kind of crash or declining market. Is just hard to fathom, and just little small changes won't get us there. Now, like I said, there's always cyclical markets and ups and downs throughout the year, but we're talking big crash, big drops, not 1%, 2% here or there. And we'll show you kind of the prices here at the end as well. All right, total listing count. This is where the data gets kind of interesting, because you can see every year this kind of same trend. There was some weird stuff in 2023 and 2022. 2020 is the crazy one. Just throw that one completely out. But here's 24, and it was following all of these trends until this last month, and listings shot up, which is odd because that doesn't normally happen. So you could say maybe our market's being weird, maybe something's happening. I may or may not have a reason that happened. I don't know. We'll talk about that in a second. But this is kind of strange to see this. And again, I'm not saying it's going to cause a crash or anything like that. but maybe we will have some more inventory. Maybe we'll have a little more choices. Who knows? But then there's mortgage rates to consider, which we'll talk about here too. All right, here's the pending listing count, which are the number of houses under contract going through escrow. So we saw the total listing count increase. So you might think the pending would increase some too. And if you look at this, it actually might have increased more than previous years. It still went down, but maybe went down at a lower rate. But again, nothing abnormal there. Pretty similar to what we've had in the past. Newly listed homes, another strange one, right? All these charts are very similar except for 2020, which is crazy. And you can see we didn't have as many listings, nearly as many listings as in pre-COVID. But then look at this. Every other time you see new listings go down, except for the last month, we've seen an increase. So my theory, and I could be completely wrong, we just had the Fed drop interest rates. Before that, everybody was saying the Fed was going to drop interest rates. The Fed did drop interest rates, and a lot of people have been waiting for the Fed to drop interest rates because then hopefully mortgage rates go down. Then there'll be more buyers, and more sellers will be able to sell their house and buy a new house at a lower rate. And so it's possible, I could be wrong, that a lot of people saw the Fed going to drop the rate or saw them drop the rate, and they decided now's the time to sell my house because I can buy something else or because there will be more buyers. Is that what happened? It's possible. Now, the tricky thing with that is that the Fed dropping interest rates didn't change as much as a lot of us may have hoped. Right now, we'll go down here to our chart, 6.5% are rates. They've been going up, right? They were up to 6.5 a few days ago. And so right when the Fed lowered rates, I think it was this day, they dropped down to like 5.7 that day, the lowest we've seen in a long time. We're below 5, but then they've been going up. So before the Fed dropped their rate, interest rates were actually lower than they are right now. So people may have been anticipating mortgage rates going down, but they aren't tied directly to the Fed rate, which can make it kind of tricky. So people might be listing more houses, but then there might not be as many buyers as they thought there were with rates going up. And why is this happening? Well, the jobs report just came out. It was much better than expected. That means maybe the economy is doing better than expected. That means maybe the Fed won't lower rates as much as they said they would before. So the markets are pricing that in. The mortgage rates are much more tied to the 10-year Fed or Treasury rate than the Fed's rate. So it's very tricky. It's very confusing on how all this works and comes together. But in general, you can't assume a Fed drop means an immediate mortgage drop, or they're like directly tied together. A lot of those drops are already anticipated. Now, if the Fed does something that isn't anticipated, like don't drop rates as much or raise them when they think they're dropping them, that's when you can see big swings. But a lot of this is based more on jobs data, the economy, than what the Fed is doing. So I've said it before so many times, I think a lower rate is better than for everybody. And this could maybe cause more of a decline in prices short term than some were expecting. Maybe it'll cause some more deals to be out there. Who knows? But we'll talk about some of the long-term stuff here as well. Don't worry. So we'll go back to our chart. And like I said, we saw that jump in newly listed homes. That's for regional stuff. I don't tend to spend too much time on that. Listing change versus mean. We won't spend too much time on that. I like these charts way better. Days on market. This is always a good one to look at because it tells us how long it takes homes to sell versus other markets recently. So again, pre-COVID, all were longer than it is right now. All had longer days on the market. Crazy COVID, a little shorter. And you can see, even though we've had more listings, more properties come on the market, there's nothing really abnormal about this chart. Very similar to every other year. Now, maybe we'll see a little higher, steeper increase if those houses don't sell right away or we have more listings. Not sure. Maybe interest rates will continue to drop. Maybe they'll drop more than they did drop. Then they went up. Maybe they'll drop again. We'll see. But again, almost everything here indicates nothing crazy going on. Just maybe some short-term fluctuations based on anticipation of rates, it's hard to say. Here's median listing price. So this gives us some good idea of what prices are doing 1% less year over year. So we've seen really, really slight drops in prices, or very similar the last few years. No big increases like we had before that. And I expect this will continue to be very similar. Maybe we'll see slightly more of a drop. But like I said before, people always say, prices are dropping, the crash is coming. Every single year, this time of year, prices drop. That's what they do. You can see the peak was over 440. Now it's 425. Every year this happens. So don't freak out when they say prices are dropping, because it happens in the fall. And then once we hit the start of the year, prices start going up again. Now, if we get to the start of the year and instead of prices going up, they start going down, maybe then we've got something to talk about and something to think about. I don't anticipate that happening, but, no one knows for sure 100% what's going to happen in the market. Price reduced share, again, this is used all the time as an indication the market's crashing. Really doesn't mean much at all. And you can see it's very similar to other years. We've actually seen a reduction in price reductions. that is what I'm supposed to say. So you can see an increase, which we had many other years. And then you see a decrease at the end of the year. We've actually seen more of a decrease than usual in price reductions. And then, you see lots fewer price reductions towards the end of the year. Nothing crazy there either. So really, I don't see anything too weird. There are a few more listings than normal. Is that because of interest rates? Is that because of something else? Not entirely sure. If anybody has any ideas, I would love to hear them. All right, now let's look at some new construction data, which helps us too, because that shows us really what might happen in the future with inventory. Single family homes started. So this is homes that, have permits pulled and gives us an idea of what the future might hold for real estate. We saw just record low inventory for many years. Steady increases, COVID hit, crazy drop, then increase, then the interest rates came and boom. Once they raised interest rates, the amount of single family homes being started dropped significantly. Rates kind of dropped a little bit, they go up, rates go up. These are almost tied directly with what rates are. And it's because builders think, hey, if rates are lower, more people will buy our houses and it's cheaper for us to build. And if rates are higher, fewer people will buy our houses and it's more expensive for us to build. Now what this does too is if people think, well, high rates mean prices will drop. Not necessarily. High rates mean they'll build fewer homes, which means there's less inventory, which actually means prices could go up. So everything's tied together. It's all supply and demand. But it's not just supply, it's not just demand. You've got to look at those together. And higher rates are, lower supply gets, which means even if you lower demand, you still don't have that imbalance. So really, it would be nice if we had more homes being built. It would help us for the future. It would help increase inventory, make it a more normal market. The way you get more homes built is to lower interest rates. Now, I talked about, here, we'll go to the next one first. Kamala Harris, and one of her ads talks about how they're going to build 3 million homes the next 4 years. And that's their big push. They're going to build 3 million homes the next 4 years. Well, these are single family homes completed, and pretty much 1,029,000 a year, 939,000 a year, 900,000. The last 2 years, that's still 1 million. The last 4 years, they've built about 4 million homes. So I just found it odd how her big push is they're going to build 3 million homes in the next 4 years, and that's going to help the housing crisis. It's actually fewer homes being built than what they built the last 4 years. And some people have pushed back on me and said, no, she means 3 million more homes than they're already building. But I've scoured the White House press sheets and documents and campaign pages and tweets. Nothing says that. Nowhere does it say 3 million more than they're currently building. They've only used that 3 million total number. And I would say I've never met a politician in my life from either side who would sell themselves short. And if they were going to build 7 million homes total, they would say, they're going to build 7 million homes total. There's no way they would use a smaller number than what they're going for. So I don't know why they're saying that. It just seemed very odd to me, because we don't want a decrease in building. In fact, they're saying that. They're trying to tout it as a good thing that they're building more houses, but it's actually less. It's actually fewer houses. So, but these are, like I said, completed. We had a really nice increase for many years, and then COVID didn't really slow things down, but interest rates did. Interest rates slowed it down. We've had some increases, some decreases, but really we need more of these houses to be built. All right, I want to go to something else that's slightly interesting. I know to a lot of people. So many people say, oh, it's a renter's world. There's so many renters. Nobody can buy. Corporations are buying all the houses. These are renter-occupied housing units in the United States. And you can see it peaked in 2016 for many years. We had a huge increase from 2004 to 2016 for renter-occupied units. And then we had a real steady, had the crazy COVID, which you just kind of throw out, real steady number of rentals at 44 million households. And this is a U.S. Census. They survey people. You're either a renter household or you're owner-occupant. It doesn't count for two. If you're an owner-occupant of an 8-unit property, all units don't count as owner-occupants, only the 1 unit. So, but what's interesting is the last couple of quarters, we've seen some pretty good increases of renter units. And so some people might say, oh, people aren't buying, they're selling, there's more renters, the market's changing. Until we look at this. This is the owner-occupied units versus tenant units down here. And we're going to shorten this up a little bit because hopefully we can see these trends. So we saw that kind of big increase down there. It looks smaller now because our chart scale changed. But you can see the crazy COVID here. But if we go back to, get out of here. Here, we'll go up here. 16, you could kind of see, you'll have to assume where my mouse is. Real steady for rentals. Well, there's a massive increase in owner-occupied. We went from 74 million up to 86 million. We gained 12 million owner-occupied units, while we only gained 1 million renter units. And what I was saying was interesting is that, well, all these renter units are being added recently. There must be less owner-occupied units. Well, you have 86, 85.9, it went down a touch, 86.259. It actually is the highest it's ever been. Owner-occupied units have been going up too. So for a long time, we weren't having a big population increase. The last couple of years, we've seen a huge increase in population and total amount of housing units, and we're seeing many more renter units because of increased immigration. Most immigrants, legal or not legal, we talked about that before, are going to be renters. They're not going to be buying houses. And so the renter-occupied units are increasing pretty significantly because of that. But owner-occupied is still increasing too. So it's not like we were seeing a big decrease in owners. In fact, we're still seeing an increase. It's just we're also seeing an increase in renters. Now, that could put more pressure on the housing market too, because people coming into the country need housing, need apartments. If they're renting apartments that other people want to rent, then they've got to find other places to live. There's all kinds of things going into it. So we have a housing shortage, and with more people coming into the country, that could make that housing shortage worse, which could change the supply and demand as well, because here's your supply and demand. If there's more people in the country, this is demand goes up. And we're not really seeing supply go up very much, so that could create that imbalance again that we saw before. We'll see what happens. We'll see. I don't know if it's going to continue to happen. I don't think so. But that's something to look at as well in the whole grand scheme of things with housing, supply and demand, future markets, all of that. All right, that's what I've got for this monthly housing report. I'm going to try and do these every month, and we'll see what continues to happen. I've been a big proponent that a housing crash is not coming. I've been saying that for over 10 years, and people keep telling me, come back in a year and say that again, and I do. But if I'm wrong, hey, I'll still come back and admit it. I've been wrong on things before, but just from my perspective, I don't see a crash coming. We'll see some slight ups and downs that we see every year, but until we build a significant amount of housing, I don't think we're going to see a big decrease in prices.